Gold companies do not hold more gold for their investors. Copper companies do not hold more copper for their investors. For some reason in the Bitcoin mining space, investors are rewarding Bitcoin miners for holding more Bitcoin. And it doesn't make sense. Again, this is part of the retail driven mentality in the industry. And as it gets more institutionalized, that thinking will dissipate. Reason being is this: if as an investor, I wanted to buy Bitcoin and hold Bitcoin, it's way more efficient and cost effective for me to first buy it and put it in a wallet, or buy an ETF, or even buy MicroStrategy, because all that's in there is Bitcoin. Buying a miner that also holds Bitcoin means I'm also paying for the mining operation, I'm paying for the G&A, I'm paying for salaries, I'm paying for marketing, I'm paying for all the other stuff. So my exposure to Bitcoin is severely hampered because of all the other stuff that is not Bitcoin.
Okay, welcome everybody to a new episode of Bitcoin Equities Talks. Today I'm with Rob, CEO of Gryphon Digital Mining. Can you please present yourself and your company?
Sure. And certainly feel free to jump in because this might go forever if I can just keep on talking. But first off, thanks very much for having us. It's always great to have a chance to talk with the company and with someone like yourself as well. So very honored to be here. But when you talk about companies, you usually talk about people. So why don't we start with me first? So my name is Rob Chang. I'm the CEO, president, director, and one of the co-founders of Gryphon Digital Mining. In my past life, I was a 15 some odd year research analyst. I was managing director, head of metals and mining at Cantor Fitzgerald. So I was in the investment banking research world in particular, covering traditional mining, so gold, uranium, copper, stuff like that. Bloomberg named me the top precious metals analyst in Q1 2016, but I think I'm more well known for uranium. I think I was probably one of the top uranium analysts for a good part of a decade, and I even currently sit on 2 uranium boards right now. So I do know the clean energy space quite well because of that type of position. What caused me to move over to Bitcoin mining, because that's what we're talking about, is that in 2017, one of my investors found, I noticed, had a 1% allocation in Bitcoin. And that caused me to wonder, why are you doing that? It made me do a deep dive into Bitcoin. And I realized that, wow, this is a world changing technology that's going to change everything. And it reminded me of a promise I made myself when I was a teenager, when the internet started. And I told myself, the next time something world changing shows up, drop everything and do it. So I kept my promise to teenage Rob. Just so happened that one of my other investors was behind Riot Blockchain, which is the first publicly traded Bitcoin miner. And so he said, "Hey, we're looking for a CFO. Why don't you fly down and take a look?" Flew down, got the job on the spot, and away I went. So I was the CFO of Riot in the 2018, the first publicly traded Nasdaq company. Learned to help manage a company through a pretty tough time. Everyone knows Riot now as a multi-billion-dollar stalwart in the industry. It had a bit of a tougher time during that period, and so I was very proud to say that I was a major force in making sure that everything stayed upright at the company. Moved on to do a few things, including doing some consulting work with Hive Blockchain, which is another solid group. So I think I'm one of the few people who can say I've been with at least 2 publicly traded Bitcoin miners at a senior level, and now 3 because we started Gryphon. And the reason why I started Gryphon was I ran into a group of investors who had the same view of how to build a Bitcoin miner as I did, because I learned from my prior experiences, and I thought, if I could ever do this on my own, and if I could do this better, this is what I do. So I was able to start Gryphon, and we were able to apply the thinkings that I was doing, and really it's gone well. Gryphon, if I would focus on the company now, we've been around as a private company for about 3 years. We're currently 1.3 exahash, which, and now looking forward to growing because we're now publicly listed on the Nasdaq. Our costs through the first 3 quarters of last year is under $16,000 a Bitcoin on an operational basis. So we're very competitive because Bitcoin is 70-ish right now. So we're doing quite well, even theoretically after the halving and the idea of it doubling really to 32,000. We're still pretty solid. But in terms of history, we have been leading in Bitcoin efficiency. We've been number 1 relative to all publicly traded companies for about 2/3 of our existence. And we're also number 1 in capital efficiency in terms of deploying capital. It's only cost us $42 a terahash to build our company, whereas it's cost our peers, when we took a look, at about $156 per terahash. And then lastly, I don't want to talk forever, we're also very ESG. We are 100% certified renewable, and it's by an independent third party. And in fact, we're actually carbon negative if you want to do that math, because we still own carbon offset credits. And so we can offset our scope 3 emissions, not scope 1 or 2, because those are already zeros. We're offsetting travel, we're offsetting machine delivery emissions, things like that. And then one last thing I want to really highlight is that we really are a blue chip team, because outside of myself, as the former CFO of Riot and a senior person at another company, my current CFO, Sim, was a CFO of Marathon, who is the current largest publicly traded Bitcoin miner. and my chief technical advisor, Chris, was with me at Riot, and he was the COO there, chief operating officer, and the interim CEO there as well. So we really have stacked our C-suite with the former C-suite of the largest public companies, and the proof is in the pudding. We've been doing quite well on an operational basis so far. So I'll pause there before I keep talking forever.
Yeah, so many things you addressed and so many questions I have. So let's start by the first one, the technical part. So you launched in what year and when were you listed?
Sure. So the company was founded in October, I believe, in 2020. I joined in January of 2021, and we were publicly listed on the NASDAQ through a reverse takeover on February 9th of this year, 2024.
Okay, yeah. So you're the latest arrival in the listed Bitcoin mining space.
I think
But
so.
when I look at your stock price, I see a much longer history. It's because it was a reverse takeover, basically.
Yes. So all of that was belonging to a prior company, which no longer exists, and we don't have any of those continuing businesses.
Okay, so when I look at your stock price, I need to start in February.
February 9th, that's when you start.
Okay. So with a stock price of was something like that, $6 per share,
Yeah,
something like that.
somewhere around there when it came out. Yes, it's around there.
Okay. I mean, I'm really impressed by your background and your team's background. It's very rare to have people who have experience in operating several boards or several management position of Bitcoin mining companies because it's such a young industry.
True.
So I understand the ESG part, but before going into that part, let me understand what made you think that you can do things better and how you're making them better.
Yeah. So as I just mentioned, we have been making it better. So far, I think it's been proven true that it is. The way we thought we could do things better is as such. When I was at Riot, we built a facility that took some time to build, and so I believe when I joined, Bitcoin was around 13,000. It peaked at 17 and went down to 3. When I joined, that operation was still being built. It ultimately, at the time, had a cost at around $7,000 per Bitcoin. And so we theoretically should have been making good money during that time. But really, when we turned on the facility fully, Bitcoin was at 7 on its way down to 3.
This
And
was
so
when they were still in Canada or when they had moved to the US?
this was when it's US only. So it was an Oklahoma City operation at the
Okay.
time. But to my point, when the machines fully were running, we were actually missed the upside and we were actually starting off at break even on its way down to losing,
Hmm.
which made things very tough. And to me, I thought, well, that was a big mistake. Why do we do that? And so that was one of the reasons why I decided being asset light made more sense. So when I take in an investor dollar, if you give me $100, I want to spend that $100 on a revenue generating machine and buy a machine. What most operators do in the Bitcoin mining space, because they want to own their facilities, is they take 20 to $20, $30 of that, and they move that over and buy and run a facility, and they only spend the 70 left on machines or something or some variation of it. So they're not making as much and they're actually buying a cost center. So my thinking was instead take all my investor money, buy revenue generation, and get bigger faster. And so when we first announced our first purchase in 2021, Cointelegraph said that we were already a top 15 miner right out of the gate because we deployed the way we did. Whereas I believe a few of my other peers that happened at the same time came out much smaller, or even half, because they decided to build their own facilities first. And from what I can tell, those are still private companies or don't exist anymore. And so that was part of what I thought it was a good
Hold
idea.
on, you're going too quickly for me. So
Oh,
basically, what you're saying is that instead, so you skipped the building the facility part, but
yes.
building the facility part brings you a competitive electricity price. So this is your trade-off, where basically you're paying a higher price of electricity compared to others. What's the rationale
Yes,
behind?
yes and no. So we are paying maybe higher operating costs, but I'm definitely not paying all the capex that came in front because that's millions of dollars that go out the door right at the beginning, and you're not making money of those $1 million in the beginning. So that's your trade-off. Over the longer run, they might have lower costs, but we can keep on replicating this process. I can start by building something. I can start building or buying something later on. But when Bitcoin is doing well, like it's doing right now, it makes way more sense to try to maximize revenues because there's big profits to be made than it is to build facilities and not make the profits that you could instead. So that was a
Yeah,
judgment
but
call.
the trade-off also it comes when Bitcoin price goes down. It's it's the Highlanders, so they're only one who will survive, the one that has the lowest electricity price, and therefore the one that has built his own infrastructure and was able to get a very low electricity price. And at the same time, I'm seeing a lot of Bitcoin miners now opening to AI. So having the facility allows you to diversify your revenue and bring on other type of customers when Bitcoin mining is not. Now it is a very profitable business, but Bitcoin price drops. You can still lease your space to other data center type of activities.
Yep. So I'm glad you brought that up because we're $16,000 of Bitcoin, which I think is among the lowest already. The reason why is because of how we designed our contracts. We have a direct cost pass-through model for our contracts with a profit share. So when things are going very poorly, we flex down to 3 to 4 cents in our history in terms of per kilowatt hour, which I think is just as competitive, if not more so, than most of our competitors. And I would actually want to report that we haven't had a single operationally cash flow negative month. We've always been cash flow positive because of the way we designed our contracts.
Ah, you have a revenue share. That's smart.
Yeah.
how did you manage to convince a power operator to take a revenue share on Bitcoin, which is like a hot potato for most average human beings?
Right. Well, the reason why is because it's not with the operator. It's not with the power operator. It's with our host provider. So our host provider has the contracts or has the relationship with the power. We only work with our host provider, and our host
Okay.
provider agreed because they're also bullish on Bitcoin to do it this way, and it's worked out fantastically in terms of one being able to flex up and down on our costs. Because when things are going poorly, again, as I told you, we're paying much lower costs. But the other part, which is very important, is that because we have a profit share, our host provider is extremely motivated to make sure our machines have 100% uptime or as much as possible. So when my machines go
So there's
down, they're using
alignment of interest actually between
exactly,
everybody.
exactly.
Okay, that's
So
a smart business model. Nobody else is doing that?
well, not as many. I think more are doing it now, but in the past, everyone was trying to just lock down 6 cent power, 7 cent power, 5 cent, 8 cent power, whatever. And what ended up happening is that when the host provider ended up losing money, they'll probably just kick you out or turn off anyway, because if they're losing money, they're not going to continue. So having a contract that locks someone into a number where they're not economic doesn't make sense.
Okay.
Doing it cooperatively is the best way because everyone works together. And that's the thing. Like I really want to finish this thought, so please let me. The reason we have great uptime because of this, and so my machines get addressed within a day, maybe a few hours to a day. I have seen other operations, and we manage other people's operations as well, that where it takes sometimes weeks to maybe months for people to address the machines that are down because they're getting paid flat rates, and so they really just don't care, and they'll get to it when they get to it, right? So my uptime is very strong because of that, and that's why we have one of the best operational efficiencies
When
already.
you say you're managing operation for other people, so you have
Mhm.
like a self-mining operation and a hosting operation?
We don't have hosts, so it's different. We're the only company that has this because it's very unique. We manage the operations for another miner. In exchange for managing their entire operations, we get 22.5% of their gross profits. And so that is unique and it normally can't be replicated. And the only reason why it exists is because we were originally going to merge with another company. And when we did that work, we were also trying to grow because we thought we were going to merge. And so we were raising capital and deploying machines. And because investors preferred to put money into a public company instead of a private company, the money went into the public company. And so that company became a Bitcoin miner overnight based off of our work to do so. And so we wanted to make sure that we weren't left with nothing if the merger didn't happen, and ultimately it didn't. So we negotiated and got this agreement where we get a 22.5% royalty for the operations going forward. And so
Oh,
that lasts until
okay.
middle of 2026.
And it's gonna last until 2026, and then you'll go back to 100% self-mining.
Correct. But it's
And
all
you don't
mining.
have any hosting projects?
No, we don't host ourselves. We're open-minded to it, by the way. So don't get me wrong when I say we're asset light. It's not as if that's the only thing we'll ever do. Just like Marathon used to be asset light until they weren't. For me, it's more a matter of when does it make sense to deploy the capital. In a hot market or when there's lots of profits, I don't think it makes sense to buy facilities unless you can't find any. If you can find hosting, use that instead because you can instead buy machines that generates revenue as opposed to, again, as I just mentioned earlier, running a cost center. At the right time, if you can buy a facility at the right price because it's at discount, definitely do that. And so if we can find a good opportunity to start owning facilities, we'd happily do so. We just don't want to overpay because also In a hot market, that's exactly the same time when building facilities are very, very expensive. And that's one of the reasons why many of our peers had trouble, because they were building facilities during the hot market. And when things turned down, they didn't have the capital or were overdeveloping at that time, and we're struggling a little bit.
Okay, I see. Let's tackle into the ESG perspective. What's about that?
Yeah, so we decided to be ESG before Elon Musk made it cool or made it popular, because we decided in late 2020 to become an ESG Bitcoin miner. And I think Elon made it a thing that the media picked up on in the summer of 2021 when Bitcoin started taking off. Our view on that is it makes sense. Like, one, you just want to be more environmentally responsible. So if we can mine Bitcoin with zero carbon emissions, why not? The other reason too is that it just increases the total addressable market with respect to investors. Some investors will look at being environmentally friendly as just a bonus. There are some investors, and we're aware of these, who it's a requirement for them to make an investment. So if we could start a miner from scratch, why not make it perfect or more addressable for everyone? And so that was the reason why we went that way. And then we took it a little bit further by, again, buying carbon offset credits to go carbon negative and be special from that perspective, and also taking the necessary steps to be independently third party certified. So we're not being ESG or environmentally friendly just because the market is telling us to. We're actually taking the additional steps to really lead the way and be doing it that way. So,
But
in my
but
opinion,
but
there's
where
a
are
difference.
your facilities? What kind
Oh
of
yeah,
energy are you using?
yeah. So we're located in upstate New York. It's 100% hydro. In fact,
Okay.
the hydro facility is actually a stone's throw away from where the operations run, like the right
I
beside.
last time I had on the show Wolf, and they are also based in upstate New York. You're sharing the same hydro connection, or it's completely different?
Not that I'm aware of. I don't think we're in the same locations, but I know they're also in New York.
Okay. Yeah, because I mean, New York, I mean, there's parts where like Bitcoin mining is banned, and other parts where like they have overflow of electricity and hydro, clean electricity, but few customers. So it's a
Yeah,
quite tricky one.
I think the key is there's also a misunderstanding for New York, because New York is really pushing against dirty, quote unquote, power use for Bitcoin mining. Given that we're 100% hydro, we're not very concerned, because we're kind of perfect for what they've been always complaining about. Whereas for the other ones, it's because there's some type of mix of dirtier power, or it's located in a location where the locals don't like it and they push back very strongly against it. We're in an economic opportunity zone, so if anything, they really want us to be there.
Okay. And I understand your ESG focus,
Yes.
but everywhere I looked at Bitcoin miners, I haven't seen any investor premium when the Bitcoin miner has an ESG focus versus another one that is not at all ESG focused.
Mhm.
Did you, like, when raising capital and going listed, and in your current discussions with investors, do you feel like there is a higher appetite for ESG when it comes to Bitcoin mining, or we're still mainly focused on the Bitcoin narrative and the ESG is like secondary?
Yeah, I think at the end of the day, it's always going to be secondary, and how important a secondary fluctuates with how the market's going. So let me break down my answer in a couple parts. You asked me how it was when we were raising capital. It was fantastic. Talking about being ESG and being in particular 100% carbon neutral or really renewable was a very great selling point for many of my initial investors. So I could confidently say that quite a few gave us money or even gave us more money simply because we were leading the charge from that angle. Now, if I take a step back and talk about later on, I do believe that being ESG is more of a bull market concern. When things are going poorly, no one cares. I would fully agree, because if your company is not going to survive, it doesn't matter if it's ESG or not. It might be shut down in a few months. So who cares? But when things are going well, and when there are many opportunities for investors to look at to purchase or to make an investment, they start looking at different criteria. And as I said, for some it's a bonus, for some it's a requirement. And so it's on varying tiers, but we will rank very high from that standpoint when they do consider it. And I will say with this one other thing is that the certification that we have that's independently verified, in the background there's a very large European fund that everyone knows that's pushing for it. And it's because they have a checklist item that requires an ESG or an environmentally responsible investment. And so in order for them to go into the space, they need to have independent verification. So this is real, and that there are some very large players who care.
Okay. Can you talk me a little bit through your asset raising? So when you launched, how much you raised, and then like some numbers around your
Yeah,
company?
it's all listed. We're definitely not raising now, just to be very clear. But in the past, it was all friends and family primarily. Actually, it's all friends and family, really. We raised around 35-ish million in equity among friends and family and ourselves. We also did a little bit of debt that's denominated in Bitcoin, around 20 million of that, and we have a smaller portion left of that.
What's that denominated in Bitcoin? First time I hear that.
Yeah, and that's why actually I was just about to talk about it more. That was one of the better moves that we've made, if I can say. We made sure to have our Bitcoin denominated in our debt denominated in Bitcoin because we would naturally be hedged because our production's in Bitcoin and our payments are in Bitcoin. By the way, the interest rate's 6% and it's due in 2026, so it's quite far away. But because we have it denominated in Bitcoin and we're only paying in Bitcoin, the US dollar price of Bitcoin absolutely does not matter to us. And that was great because when Bitcoin prices dropped a lot in the past, call it 2 years ago or so, we didn't care. Whereas many of our peers, they took debt in US dollars, but they made revenues in Bitcoin. And so when Bitcoin prices dropped on US dollar terms, they ended up turning upside down because they couldn't make their payments because the
Yeah,
US
that's what
dollar,
happened with Core Scientific, actually.
for example, yes. And so you could go as badly as having to declare bankruptcy over it. Whereas for us, didn't matter. We were always just paying Bitcoin anyway. And so it was still just going to be 6% annually go forward. And so we basically sailed through, I would say, the down period because one, we had the flexibility of our contract, as I said, with the direct cost pass through with profit share, which flexed down, but we also had a loan that didn't hurt us from a US dollar perspective because we were still generating Bitcoin.
Yeah,
The
first
same.
time I hear about a Bitcoin denominated loan. And
Mhm.
6% is not that bad, actually, because,
Good luck
yeah.
finding that. We're very happy with it.
Okay, and so you raised the friends and family and the Bitcoin denominated debt,
Yep.
then
That's it. So we haven't raised that much. In total, we raised around 50 some odd million, and we're able to launch the company off of that. And now at the right time, we'll look to raise capital. Definitely not here because we're too undervalued.
so you haven't
Uh,
raised since launch, basically.
we have not raised since launch. No,
Okay. And
and
how did you do the listing then without raising capital?
you don't have to. People usually do. We intentionally didn't because we wanted to show everyone that we didn't need the money. We are operationally cash flow positive. We would like more money. Don't get me wrong, because I would want to grow the company, but we don't need it to to survive. So people often say, "What's your burn rate?" We don't have one.
So you
We do.
just did a share exchange with the target.
Correct. That's it.
Okay.
Yep.
Yeah, I mean, your financial background surely helped a lot in structuring all these deals. I have a
I
financial background too, and the more I look at the space, the more I see like just numbers and the structuring is what is really lacking. Because on one side you have
yeah.
people that come from an IT background
Yes.
and they're like IT focused. And when you look at Bitcoin miners in general, I've been following them for a while now. When it's bull market, they all like buy at the same time, and when it's bear market, they all like stop and suffer at the same time. And the fact that you have like these revenue sharing contracts and all the structuring you have made, the Bitcoin dominated debt, etc. It's really interesting to bring this financial knowledge to the space.
Yeah,
And
I'm really happy you noticed because I'm a former sell side analyst, and I noticed that a lot with earlier stage companies is that they generally don't have someone that's financially set. I'm patting myself back, but very familiar with the financial markets and is very experienced in the capital side. And I think that's a big mistake. I think everyone needs to have someone who knows this because I agree with you. One of the things that shocked me the most when I looked across the Bitcoin mining space over the past few years is that a lot of deals are deals that other industries wouldn't do because they are not as attractive for the company as they should be. And given how hot the markets were, they should have been better. So yes, I'm very proud to be one of the only few, let's say, at least for now, that have that knowledge and are applying it to the company.
yeah. Okay, let's talk a little bit about the market. Um, since the launch of the ETFs at the beginning of this year, we have seen lots of appetite, lots of inflows on the ETFs, billions coming in. But at the same time, we have seen a strong underperformance since the beginning of the year of listed Bitcoin miners in general. And
Yes.
what's really odd, and I wasn't expecting it at all, is you have like a strong overperformance of MicroStrategy, which is another Bitcoin equity.
Yes.
So what's the flow? What's happening here? Like how? What's your analysis on this?
Yeah, it's interesting. So first off, let me say this doesn't make sense. They should be positively correlated at the very least. There should be no reason why miners drop and Bitcoin rises. We're all getting all-time profits or close to it. And so why would we possibly be going downwards in valuation? And it's not as if they really took off going into it either. Like they did a bit, but not as much as they should, and nothing like what we saw in 2021. So I think there's a
Yeah,
disconnect there.
but don't you feel like nobody has a clue about what's happening? Like as if financial investors are completely lost. They're trading stocks as if we were like 50 years back, where like they're buying on rumors and on impressions.
It's
And
always
I
like
have
that
looked
though.
at a lot of analyst projections and analysis. They still look at PEs and stuff like that, which makes absolute no sense when you look at Bitcoin equities in general.
Yeah.
And even the basic calculation about the premium of MicroStrategy, which is mind blowing, doesn't make sense. I mean, why would it trade twice the assets when it's just holding on a stock of
It,
Bitcoin? So, how do you see
it's
it? Like from a sales analyst, from
yeah.
a Bitcoin miner CEO? How do you analyze it? Now, where are we going? Like
I'm probably pretty well positioned to answer this question, given that I'm a former buy side, sell side, and I'm a Bitcoin miner. So I've taken all positions, I think, before that. And unfortunately, my answer is like, I don't quite know, but I have a few ideas. Talking about the Bitcoin miners first, I think there is worries about the halving coming up, which is silly because we all knew what's coming. You can predict it. It's every 4 years. So it's not as if this is surprising
yeah,
anyone
it
what's
should be
happening.
priced in. And even if it was priced, it was not priced in. The
Mhm.
price of Bitcoin adjusted so much that the halving is not an issue anymore. Like, why are you valuing today a Bitcoin miner lower because of the halving, and the price of Bitcoin is like much higher?
Yeah.
It's
So
definitely
so
compensated what you're gonna lose in the halving, right?
Exactly. So we should be good. So let me boil down to the answer right out of the bat because I was going to talk about a whole bunch of other things, but let me just go right to the answer in my opinion. I believe it's because this is a very heavily retail driven industry. And so retail investors don't really look too deeply into a space, a company. And unfortunately, they're very easily swayed by whatever news, rumor, or whatever happens because that's the sexy thing. Everyone wants to try to be the guy that finds the next whatever and that goes up or trade on a rumor. And so they don't look detailed into the company, realizing that all of us miners have already prepared for the halving because we knew it was coming. They just know, hey, the halving's coming. It's going to be bad for the miners because revenues get cut in half. I got to sell. Then there's also the ones who love Bitcoin um, and see that now there are ETFs and there's the MicroStrategy. So I used to just buy the miners because that was my only way to buy exposure to Bitcoin. And so now that there are ETFs, I'm going to sell and buy those. Or MicroStrategy, Michael Saylor, everyone talks about it. This is a very sexy story. So why don't I buy that instead? Because his stock keeps on rising. And that's the thing. Like a lot of people just look at charts as well. And so MicroStrategy keeps on rising. He is phenomenal in what he's doing in terms of raising capital to buy even more. And that's a virtuous cycle where if you buy more, you take supply off, it goes even higher. And he's doing it with that, getting crazy valuations. And unfortunately, I think retail gets attracted by that. Not to say there's anything wrong with MicroStrategy, it's a very good concept, but they go with whatever's hot. And because Bitcoin miners are in a downtrend, it continues a downtrend because they're thinking, why would I want to step in front of that and buy something that's going down? Everyone talks about wanting to buy something for cheap. Very few people actually do because at that time when they make that decision, it looks like there's something wrong with that stock or that investment opportunity. So very few people actually have the guts to really do what they say. And instead, most pile into whatever's moving because they see it already going in that direction and they're really FOMOing their way into it, which is the reason why most retail investors lose money is because they do it the wrong way. Fundamentally speaking, as I'm saying, Bitcoin miners are probably close to, if not already, making record profits. At least before halving, they are. So there's really no reason for the miners to trade down. They should be just trading higher, or at least flat. But unfortunately, they are. One thing I want to hang my hat on is that historically miners have outperformed Bitcoin, the commodity, over the longer term, over the post halving period. So I think that's going to happen. And right now, with the pullbacks that we're seeing, it's just making for an even bigger opportunity for investors who do have the guts to get in earlier, as opposed to just riding the train power. So and rant.
So how can one make money
Mhm.
trading all these? Like, shall I go long Bitcoin miners? Shall I go short MicroStrategy? Shall I short the ETFs? Go long Bitcoin miners? How can you make money out of it?
Well, first thing, I'm not giving investment advice. It's just really thoughts. But it really just depends on their investing strategy as well and what they're comfortable with. Like momentum investing is a thing, and it is possible to make money off of it. It's not my thing, so I've never been very good at doing that. But those who are piling into whatever's already moving up can do quite well. So all the power to them. I'm a fundamental guy. I look at disconnects. I look at what things should be valued at, and I look at it in more detail in terms of understanding what's really driving the value. And I think that's the key thing is if any retail investors are watching, really go past the headline stuff and really understand the companies that you're buying as opposed to the hype. Because what should matter for a Bitcoin miner is how efficient they are. Because at the end of the day, Bitcoin prices go up and down, but the companies that will do best are the ones that have the lowest costs and are the best in running their companies. Because the other ones are the ones that are the first ones to turn off. Like I think you mentioned, it's a survival of the fittest type thing, where if Bitcoin prices go down, we're all going to incrementally shut off based on our cost points. And so the guys with the highest cost levels are the ones that shut off first, which is better for the guys on the lower side because our proportion of Bitcoin that we win is entirely related to the global hash rate. So as long as we stay on the low end of the cost curve, those higher cost guys are all dropping off, which means that the amount of Bitcoin that I'm going to make is going to go up and up and up because there's less competition. So focus on stuff like that because over the longer term, that stuff is going to matter because at the end of the day, valuations for companies is basically how much cash they make. Positive cash, like net income or positive cash flow, really is most important. And
Yeah, but you
those,
as a CEO, okay, when you
yeah.
look at your stock price and you say we are underperforming, I need to bring value.
Mhm.
You you have the choice of either deploying capital to buy machines that's going to deploy to produce Bitcoin, or just go buy Bitcoin directly.
I love this question.
And therefore, if you buy Bitcoin, you go into the MicroStrategy business model and you get like much higher valuation. If
Yep.
you go and buy a machine, you get discounted for buying machines. And at the end, you're supposed to make more Bitcoin buying the machines. But from a stock market perspective, you're better off just buying Bitcoin and getting the hype that MicroStrategy has. How do you balance, the decision? And a lot of
I
Bitcoin miners are doing both. They're like hodling and
mhm.
mining. Based on what I've never understood, because some of them are not hodling, but the ones that are have like a kind of balanced portfolio based on their experience, etc. But so, how do you see it?
There are lots of different angles I'm going to take on this. So let me first talk about hodling because that's a very hot topic for me right now. Um, I don't believe a Bitcoin miner should be hodling for investors. It doesn't make any sense to me. And I'm talking about this from the fact that I used to be a commodity analyst. Again, Bloomberg named me top precious metals analyst in Q1 2016. I was the MD head of metals and mining for Cantor, so I understand commodities pretty well. Gold companies do not hold more gold for their investors. Copper companies do not hold more copper for their investors. For some reason, in the Bitcoin mining space, investors are rewarding Bitcoin miners for holding more Bitcoin. And it doesn't make sense. And I think, again, this is part of the retail driven mentality in the industry. And as it gets more institutionalized, that thinking will dissipate. Reason being is this: if, as an investor, I wanted to buy Bitcoin and hold Bitcoin, it's way more efficient and cost effective for me to first buy it and put it in a wallet or buy an ETF or even buy MicroStrategy MicroStrategy because all that's in there is Bitcoin. Buying a miner that also holds Bitcoin means I'm also paying for the mining operation. I'm paying for the G&A. I'm paying for salaries. I'm paying for marketing. I'm paying for all the other stuff. So my exposure to Bitcoin is severely hampered because of all the other stuff that is not Bitcoin. And here's the other thing. If the miner's operation for some reason suck, I'm not pointing to anyone, I'm just saying in general, you now can't sell. Now you can't just sell that operation. You have to sell the entire company, but that means you lose your exposure to Bitcoin. With the other opportunities available, which I just mentioned, you can own it yourself, you can buy an ETFs, you can actually separate it out. And so that if the miner sucked, sell that, you still have your Bitcoin. There's no reason to have these two mixed because it's just not an efficient way of doing it. And that doesn't exist in any commodity outside of Bitcoin. And my belief is the only reason why that exists is because retail investors haven't realized that you can separate and doesn't understand that it's actually much more cost efficient to separate the two. So for Gryphon, we do own Bitcoin and hold it, but we don't hodl it. We look at it as capital to use. And when there's the good opportunity, we will sell the Bitcoin to buy more machines, for example. So let me also then now answer the other question as to, as a company, what do we do? Um, my belief is that it's better to buy machines relative to buying Bitcoin. One, because of what I just said, but two, when I buy a machine, it costs me right now $16,000 to build it to mine a Bitcoin. Right now, if you were to buy a Bitcoin, it's going to cost you 70. So obviously, it makes way more sense for you to mine it instead of buy it. And so that's the one thing. And also the other thing too is that if you look at the price of Bitcoin, sorry, the price of miners, even after the pullback, and you look at how much it costs to buy a miner, the market is generally rewarding every exahash, giving somewhere in the hundreds of market cap per exahash deployed. I can buy an exahash for much less than 100 million. So it still makes more sense for me to buy machines and deploy it because the market is still rewarding miners at a higher return relative to what I've spent. So it just makes more sense that way. So long answer to that, but thank you for bringing it up because that's a very hot topic for me.
Okay, one last thing. Again, explaining the underperformance. There have been recently some projects from the Biden administration to tax Bitcoin miners. Is it affecting the price performance of Bitcoin miners? And do you think this kind of legislation can pass through?
Is it affecting the price? Well, it's been Bitcoin miners have been acting weak for the past week, so I can't tell what's causing what now at this point. It certainly isn't helping. The good thing is that that's more of a headline item. Will it go through? I think it's highly unlikely because I think it needs a lot of support. And I don't think there's enough support to get something like that through because there are many other political figures and parties that do believe that Bitcoin has a place in the U.S. So I don't think that's going to occur, but anything can happen. That's a political thing, really, because we've actually seen a lot of this type of thing from this administration, from various angles of where they put in some type of policy to really slow down
But
Bitcoin.
don't you think like I'm gonna tell you what I think. I think
Mm,
that with Bitcoin price going up, okay, at first everybody get excited, so Bitcoin miners go up. But then when the price of Bitcoin goes too much up, in people's mentality, the additional electricity consumption that this new price is going to generate is going to be so high that you're gonna get banned. And actually, I mean, Bill Ackman was tweeted a couple of days ago that the higher the Bitcoin price, the more energy you're gonna use, and therefore Bitcoin mining is gonna end up using all the energy on Earth, and
understood.
and they're gonna boil our oceans. So, what do you think
Yeah.
about that? I'm
Thank you
playing.
for
I'm
bringing.
playing a little bit the devil's advocate here, just to be completely transparent.
Fully understand that you don't actually believe this stuff, but thank you for bringing it up because that is the most ridiculous line of thinking that unfortunately is being used right now. So, logically speaking, Bitcoin miners do not deploy their operations in places where there's lots of competition. It makes zero sense. Electricity is our number one most important cost item, and deploying in areas where there's lots of competition naturally means it's going to be very expensive for us to run. So we would not be anywhere near those locations. Like, I'm not dropping my Bitcoin mining operation in the middle of New York City. It makes zero sense, right? We go to locations where there's stranded power because that's where it's super cheap. And if anything, Bitcoin mining's existence has actually helped the development of the undeveloped regions because we're going to areas where there's no demand. That means that that usually means that there's no anything else. So a Bitcoin miner setting up shop there means that there's economic deployment of power in that area, and it's helping the growth of good projects. So I've heard of many projects that are renewable that are now being started because Bitcoin miners are an anchor power user for them, and that's great for the region itself. And even using Gryphon as an example, which is what I'd love to do, is we're in an economic opportunity zone in upstate New York. It's a former Alcoa smelter that's vacated, and so that area used to take in a lot of power, but its main electrical tenant left. And so everyone else in that region would probably have to face higher power prices if no one else came in to take up the economic amount of demand. So having Bitcoin miners come in has actually justified the deployment of cheaper power in the region. And that's kind of the same story that happens everywhere because we don't go to where prices are expensive. So that whole argument of us taking power away from other things doesn't make sense because they're not looking at where we're actually deploying, and where we're
Yeah,
deploying is cheap.
but there's a price level
Mhm.
on which you're gonna go to New York and take the electricity from people living in New York. It's just a
There's a
question of Bitcoin price.
Well, I guess at some point, but you'd have to run out of other cheaper places, and I'd say New York City would be among the very last places that we would do that. You would need to see Bitcoin mined pretty much everywhere because there's lots of open space in Wyoming, for example, right? And they're cheap for power. So and of course, it's not even just the U.S. There's places all over. Africa is very open right now for power, so there's lots of hydro there. So there could be great economic development, and I think this is actually going to be one of the drivers for economic development in Africa, actually, is because they have a lot of cheap power. Once we start coming in and start using, building up that infrastructure, they will now have better commerce ability for the whole region. So I think one of the nice drivers for growth in countries with excess power is going to be Bitcoin mining.
Yeah, the thing is that what you're saying makes a lot of sense, but I think in people's mind, it's not easy. And I went through it. Like I was a Bitcoiner until 2017, where I
Oh,
heard the headline from the World Economic Forum that in 2020, Bitcoin will consume all the electricity of the world. And this is where, like, I said, okay, I should go and buy some other coins because this one is going nowhere. Until I did my research basically and understood, but it's not very. It's a bit counterintuitive that if you consume like electricity consumption generates electricity instead of reduces electricity, in the sense that you're gonna power up closed plants or fund the renewable projects that were not fundable because they were lacking the customer, or
yeah.
develop gridless power facilities and so many use cases that so I think it's like our brain is set up in a way that you're gonna mine Bitcoin, it means you're gonna consume more electricity. It means that my electricity bill in New York or wherever city I'm in is going to increase. But in essence, it's the other way around completely, because you want to pay cheap for your electricity, so you're gonna have to fund the cheap sources of electricity. So you're gonna produce more electricity instead of going to the existing high electricity prices.
And this goes right into my earlier comment about how um, the average investor doesn't spend the time to think about these things. Whereas once they peel back the onion or whatever, however you want to say it, you'll notice that
Even the
the argument.
average politician, actually, because if you look at the bill,
True, very true. It's all the same, fortunately.
yeah. Okay, we're gonna wrap it up. Thanks a lot, Rob, for having me on the show, and I look forward to have you again as soon as you have anything new to announce. Feel free to hop in and update us on your performance.
Sounds good. Thanks for having me. This has been a very enjoyable conversation. So
Thank
thanks.
you.